So let's talk about Bitcoin. You've probably heard the name thrown around a lot, maybe on the news or maybe from that one friend who's always talking about crypto. At its core, Bitcoin is a new kind of digital money. It's not like the dollars in your bank account. There's no physical coin or bill. It exists entirely on the internet. It was created to be a currency that no single person, government or bank could control. This idea is huge. It's a completely different way of thinking about money. For the first time, people could send value to each other anywhere in the world without needing a middleman like a bank. The main reason people get so excited about Bitcoin is this idea of decentralization. Think about it. Your bank can freeze your account, and the government can print more money, which can make your savings worth less over time. Bitcoin operates on a technology called blockchain. It's a public ledger that records every transaction. It's secured by a massive network of computers around the world, which makes it incredibly hard to cheat or shut down. It puts the power back into the hands of the individual. That's a powerful concept, and it's what pulls so many people in. They see it as financial freedom. Now, this newness is also what makes it so fascinating. It's like the early days of the internet. Nobody really knew what it would become, but everyone could feel that it was something big. Bitcoin is the same. Some people see it as the future of all finance, a new global currency that will change everything. Others see it as digital gold, a place to store wealth that can't be easily taken or devalued. This potential for massive change is a huge part of its appeal. It's not just another stock or bond, it's a completely new asset class. And that gets investors very, very interested. Because it's so new and different, its price has been on an absolute roller coaster. It's famous for its volatility. That means the price can shoot up to incredible highs and then crash down just as fast. This is where things get both exciting and incredibly risky. For some, these price swings are a golden opportunity to make a lot of money very quickly. For others, it's a source of major stress and potential losses. Understanding these ups and downs is the key to understanding Bitcoin itself. It's a wild ride, and it's important to know what you're getting into before you even think about buying in. So, what actually causes these insane price movements? A huge part of it comes down to simple human emotion. Fear and greed are powerful drivers in any market, but they are supercharged with Bitcoin. When the price starts rising fast, people get FOMO, the fear of missing out. Everyone wants in on the action. They see stories of people becoming millionaires and they rush to buy, pushing the price even higher. This creates a massive hype cycle. It feels like the price will go up forever, and no one wants to be left behind. This is pure greed talking, and it can create huge bubbles. On the flip side, you have fear. When the news turns bad or the price starts to dip, panic selling can take over. People get scared they're going to lose all their money. They rush to sell their Bitcoin as quickly as possible. This flood of selling pressure causes the price to crash. A small dip can turn into a massive downturn in a matter of hours. This is often called FUD, fear, uncertainty, and doubt. Bad news, whether it's real or just a rumor, can spread like wildfire online and cause people to sell off their holdings in a panic, creating a domino effect across the market. Government news and regulations also play a massive role. Remember, Bitcoin is a global currency, but it operates within countries that have their own laws. When a major country like the United States or China makes a statement about cryptocurrencies, the market listens. If a government announces they are creating new friendly rules for Bitcoin, the price might surge. People see this as a sign that Bitcoin is becoming more legitimate and accepted. It reduces risk in the eyes of big investors, making them more likely to buy in and hold for the long term. But the opposite is also true. If a country decides to ban Bitcoin trading or mining, it can send shockwaves through the market. This creates a lot of uncertainty. Will other countries follow? Will it become harder to buy and sell? This kind of negative news can cause the price to plummet. Even rumors of a potential crackdown can be enough to spook investors and trigger a sell-off. The constant back and forth of global regulation means the market is always on edge. reacting to every piece of news that comes out from governments around the world. Now let's talk about the big fish in the Bitcoin pond. We call them whales. These aren't actual sea creatures, of course. They are individuals or groups that hold a massive amount of Bitcoin. We're talking about thousands or even tens of thousands of coins. Because they control such a large portion of the supply, their actions can have a huge impact on the price. When a whale decides to buy or sell a large amount, it can create massive waves in the market. Their moves are watched very closely by smaller investors trying to guess what will happen next. Imagine a whale deciding to sell off just a small fraction of their holdings. Even that small fraction could be worth hundreds of millions of dollars. When an order that large hits the market, it can overwhelm the buy orders from smaller investors. This instantly pushes the price down. Other traders see this big move and might start to panic sell themselves, which makes the price fall even further. Whales can sometimes do this strategically to manipulate the price, allowing them to buy back in at a lower point. It's a high-stakes game, and the whales are the biggest players on the board. It's not just individual whales anymore, though. More and more big companies and financial institutions are getting involved. Think about companies like Tesla or MicroStrategy buying billions of dollars worth of Bitcoin to hold on their balance sheets. When a major, well-respected company does this, it sends a powerful signal to the rest of the market. It says, "We believe in this asset for the long term." This can build confidence and bring in a new wave of investors who were previously too scared to get involved, helping to drive the price up. This institutional involvement is a double-edged sword. On one hand, it brings legitimacy and a lot of new money into the space, which can help stabilize the price over time. Big banks and investment funds are starting to offer Bitcoin products to their wealthy clients. This makes it easier for mainstream money to flow into the market. On the other hand, it also means that Bitcoin is becoming more connected to the traditional financial system. A crash in the stock market could now cause these big institutions to sell their Bitcoin, linking its fate more closely to the global economy. So, why should any of this matter to you, the average person? Because these wild swings have real-world consequences. For investors, the volatility is a chance for incredible gains. People who bought Bitcoin early and held on have seen life-changing returns. It's the kind of wealth creation that is rarely seen in traditional markets. This potential for huge profits is what keeps people coming back, hoping to catch the next big wave up. It's the ultimate high-risk, high-reward asset. You could multiply your money, but you have to be prepared for the journey. However, the risk of massive losses is just as real. For every success story, there are countless stories of people who bought at the peak of the hype, only to see their investment get wiped out in a crash. This is why you always hear the advice: never invest more than you're willing to lose. The volatility can be brutal. It can destroy savings and cause a lot of financial and emotional pain. This is the dark side of Bitcoin's price swings. It's not just numbers on a screen, it's people's hard-earned money on the line, and those losses can be devastating. These price swings also affect more than just individual investors. As Bitcoin becomes more integrated into the economy, its volatility can have broader effects. Companies that hold Bitcoin on their balance sheets see their company's value swing with the price of crypto. El Salvador even made Bitcoin legal tender, meaning the country's financial health is now tied, in part, to these wild price movements. This shows how Bitcoin is slowly but surely becoming a factor in the larger financial world, for better or for worse. Its ups and downs are starting to ripple out and affect everyone. Ultimately, understanding what drives Bitcoin's price is crucial for anyone interested in the future of money. Whether you're thinking about investing a few dollars or you're just curious about this new technology, knowing why it moves is the first step. It's not magic. It's a complex mix of technology, human psychology, and global events. By understanding the forces at play, the hype cycles, the government actions, and the power of whales, you can make more informed decisions. It helps you see past the noise and appreciate Bitcoin for what it is, a groundbreaking but highly volatile asset that is here to stay.